Hi everybody, this is Sue Rawlings with Rawlings Tax Services. I am doing a video today to do some updates with unemployment and what they're getting some clarification on a few things. Also, I'd like to talk to you about the child tax credit and giving you some updates on that, about my concerns of giving you the child tax credit throughout the year. So there are some updates that I need to give you on that. And also about the premium tax credit that people get if your income is within a certain range, you can have some help with your health care. And so there's some changes with that as far as people that had to pay. So pay in this year because their income was higher because of unemployment. So we need to talk about that a little bit. And then also about Cobra. So there's some Cobra changes. So if you lost your job, if anything was anything other than involuntary, leaving your job. So if you voluntarily left your job, this does not affect you. But if you were laid off, if you lost your job and you had to start paying Cobra, there's some issues and things that we need to talk about with that. So I'm going to try to keep this as short as possible. So let's get into it. The unemployment, again, there are no updates for Minnesota and Wisconsin states as far as them accepting the federal not taxing the $10,200 of the unemployment. And that's for people that make $150,000 or less. And we're not sure what they're doing. So we're sitting on those returns that have either the states for unemployment because we just don't know what they're going to do. We are filing now the IRS side. So just know that we are going to start calling next week our clients that have unemployment that have not filed yet. Now, the people that have filed, there is a little bit more information about that, not much, but the IRS is emphasizing that we should not file an amended return at this time, as the IRS will adjust and send out those refunds. So that's what we're hearing right now. Okay. Again, this is not affecting the states, but it is affecting the federal side. So they are talking about that they aren't going to adjust and send out those refunds so that we don't have to do them. I think this is 99% true that they're going to do that, but it's our government. They can change at any time, so we're not 100% sure. But this is what they're telling us right now. Okay, bear with me here. Now, there are, as far as the child tax credit. Now, I talked about this in my last video. So if you haven't seen that video, we will, please go and look at it and pay attention to the child tax credit. Now, this is the one that I'm very concerned about, that they're going to start giving the money for the kids that qualify. And the eligibility before used to be 17 and under. Well, they changed this for 2021. And the qualifying child is now the age of 18 and under. Okay. So they've changed that around because, we've always wondered, why did they cut this off at 17? Why not 18? Well, they finally took care of that issue. The other thing is that they're raising that credit amount from $2,000 to $3,000. Now, if you do have a child between 0 and 5, they are going to give out $3,600 for those kids. Okay, these are fully refundable. They used to be partially refundable, and so what's happening is if you didn't have to use that credit on your tax return, they refund the whole thing. They used to only refund a part of it. So now that, and again, that's something that you'll probably want to talk to your tax preparer about, and they'll show you exactly what's going on with that. There is the same phase out. There's income phase outs for the child tax credit. Anywho, we won't talk about that, but so what they are planning on doing is between July and December, they're going to be sending out, meaning the IRS, will be sending out monthly advance payments, generally by direct deposit, okay? And it's going to be 1/12 of the annual advanced amount. Okay, so we'll get half of it this year is basically what they're saying. And it's going to be based on the calculation of the 2020 filed tax return or the 2019 if the 2020 has not been filed. Taxpayers who receive advanced payments in excess of the allowable child tax credit for 2021 generally will repay the excess amounts on their 2021 returns. Well, there it is, folks. It's coming up that if you get too much of a child tax credit, because it's based on information from this right now, it's based on real time. If you get the child tax credit and you no longer have that child on your return, you're going to have to pay that back. Okay, that's number one. Number two, there is going to be a little bit of a credit sitting there, but not what you're used to at the end of the year. So the other thing that they're going to be doing is they're going to do, hold on just a second. Let me get my notes here. The IRS is going to be building a portal, okay? And it will allow taxpayers to update information such as the number of qualifying children that you have, filing status, significant change in income, or to elect out of the advanced payments, okay? If you don't need the money, elect out of it, okay? This portal is not made yet. I will come back with a video when that is done, and I will actually do a video that's interactive with that portal so that you can see what I'm talking about and how to sort of use it. I won't be able to do the whole thing, but I'll get you started, okay? But what's really nice is that, you know, some people they had their kids this year in 2021. Well, if they need that money, you can get that child in to this portal, and then they will send you the qualifying the advance payments, okay? You don't have to wait until the end of the year to get that credit. However, like I discussed last video, this really concerns me that they're sending out these advance payments, and they are looking to make this permanent. So, again, clear as mud, but we have a little bit more information on that, okay? But they will do a portal, and I'll come back with another video for you. They are also upping the expense limit for the child and dependent care credit. So I haven't talked about this, but the expense limit used to be that you could not exceed $3,000 for one qualifying individual and $6,000 for more than one qualifying individual. But what they've done is that they've brought it up to $8,000 instead of $3,000, and $16,000 for more than one qualifying instead of $8,000. So there's more. They brought the phase out up higher, so you can make more of an income before that phases out, where you can't use the dependent and child care credit. It's also 50% of the expenses are refundable. I mean, they've really expanded some of this stuff with the children. So that's very cool. Okay, another thing is that the premium tax credit. Now, I did mention this earlier. This is for 2020 only, as far as we know. This could change. But for 2020, taxpayers will have no additional tax imposed where an advance premium tax credit is higher than the premium tax credit. Okay. So there's some of you that I have done taxes for that get health care through Badger Care or health care, etc. It's through the exchange. And if you had or were supposed to pay because you were short, or excuse me, you had to pay in because you made too much money this year, and being on unemployment, most people did make too much money, and so they had to pay back some of that premium tax credit. Well, the IRS will adjust and get that back for you. So they're not going to tax you on that, which is actually very cool. Now, next year, they're looking at, they actually upped the ranges that people can qualify for the premium tax credit. So that's cool too. And then, let's see, Cobra premium subsidies. Now this is important. There is full 100% subsidy of the premiums. Okay, so what that means is that assistant eligible individuals, and it's those who are eligible for and elect Cobra health coverage for a reason other than voluntary termination, will not have to pay your premium for Cobra coverage received during the period of April 1st, 2021 through September 30th of 2021, or until expiration disqualification of Cobra benefits under regular Cobra provisions, whichever comes first. Again, clear as mud. So what they are requesting that you do is that the subsidy amount is not included in your gross income, and then individuals not eligible for the healthcare credit for any period which they received the subsidy. So if you did get coverage, if you did get some sort of healthcare coverage, apparently for any period in which you received a Cobra subsidy, something's going on with that. I don't know. Individuals are not eligible for health coverage tax credit for any period in which they receive a Cobra subsidy. So again, it's that like premium health credit or premium credit. Okay. Individuals who did either not elect or discontinued Cobra coverage prior to April 1st, but would otherwise have been eligible during the April to September period, have a 60-day extended election period to commence coverage after notice has been provided to them. A notice of eligibility is required to be provided by plan sponsors. So basically what they're saying is that if you chose not to take the Cobra because it was too expensive, contact your plan sponsor and get back onto the Cobra. Okay. So you'll definitely want to be able to contact them. They'll give you more information. But I just wanted to let you know about that portion. I don't think there's anything else except for it. Most of it is for businesses, the rest of it. But again, if you have any questions, give us a call. 651-646-0417. Or look us up at rawlingstaxservices.com. www.rawlingstaxservices.com. And we'll definitely try to answer your questions. Again, I will be contacting, or actually Amy will be contacting people that have unemployment issues. Now, there is one more issue that we need to talk about, and this is Minnesota and Wisconsin specific. So any of you out there that I've done returns for, pay attention. And any of you that are going to have me do your returns, pay attention. So there's been a mistake done, or I don't know what you want to call it, where some of you got sent home to work from home. So if you worked in Minnesota and you got sent home to Wisconsin, you were supposed to have been having your taxes taken out for the state of Wisconsin, not for Minnesota. And so Minnesota has contacted all of us that, prepare taxes and whatever, and requested that we help to get these W-2 corrected, or at least inform you that we need to get these corrected. So we're going to be calling people again that have Minnesota and Wisconsin, and we're going to be asking you, did you get sent home? I know some of you did, but I cannot remember all of you who did. So we're going to have Amy calling, and we're going to find out who was sent home, and then we're going to have you go and get a W-2C correction, and we're going to have to do an amendment on your return for Minnesota, Wisconsin. And we're running into some companies that don't want to do this, well, if they don't, I have to report this to Minnesota as fraud, okay? And it goes against that company, not us, not you as an individual, but it'll go against that company. And then what we will do is we will sit down, you and I will sit down, and we will figure out how much were you paid until you were sent home to work, and then how much you made in Minnesota and how much you made in Wisconsin. And then we have to figure that out and put that into the computer. We have to write up a letter saying this is why we're self-computing this, and send it in, and then also send in a report of that company that did not want to change that W-2. So again, more work that is coming in that has been goofed up because of COVID, and just know that we will get this taken care of. Things have now really gotten backed up. And again, for everybody, this is not just myself. It's not just one or two of the tax preparers around. It's everybody. And the tax preparation community is actually asking to have, and the accounting community, they're asking to have another month. So we're hoping that tax season will get extended until June 17th. Again, we're really sorry that all of this is happening. We have no control over it. It's our government and what they're wanting to do and not do, and what they're expecting of us, all of us, to do. So again, we will get all of this taken care of. It's just taking a little bit longer than normal. This year has been unprecedented craziness. My head is still attached. It hasn't spun off yet. But anyway, again, if you have questions, give us a call. Until my next video, take care and enjoy the nice weather that we're going to have coming up. And we will talk to you soon. Bye-bye.